Hey, good morning. Let's go over today's trade plan. So on Thursday, we saw some extremely strong buying, and at this point, we've also seen the follow through in the overnight session where ES has already made a new marginal high, and now we're just balancing in a range. So at this point, the buy side is firmly in control, and we can definitely consider longs on pullbacks into support. The only question is how much more upside is left in this market, considering that it's options expiration, quadruple witching. We can certainly move a little bit higher, but the risk reward really starts becoming questionable at these higher prices on the long side. So any pullbacks into support can offer some conservative long setups. The conservative zone to go long is 50.75 to 53.75. We have immediate support at 60 to 62, and the buyers can certainly hold the market above that area, but that is the most aggressive spot for buyers to step in. So that means that if we are looking for longs at that zone, then there needs to be a lot of supporting evidence in real time to go with that idea, which means that the momentum has to be upsided, the internals have to be strong, and there can't really be any warning signs in order to take a long at 60 to 62. And on the upside, we have resistance at 72 quarters, 73.75. That is basically the previous all-time high and the current overnight high. And that's an area where even at this point, when we go back up there, there can still be some short-term resistance there. But given the strength in this market, we're not looking for short side setups. The focus is going to be on the long side. 60.62 is the aggressive spot. 50.75 to 53.75 is a little bit more conservative, and in the event of a deeper pullback, the 44 to 46 becomes even a more conservative area to enter long. So the main idea heading into Friday is to focus on long setups in direction of the overall control at the key support zones. And ideally we do get a little bit of a deeper pullback. We don't just hold at 60.62. If we do, that tells you that the market is very strong and we can continue pushing to a new all-time high, but that makes it a more difficult trade. The easier trade would be if the market actually pulls back a bit more into some more conservative areas, and that way, on the downside, the market gets short-term exhausted, heading into a support zone. The bigger picture is now bullish. The overall control is on the buy side, so buying on first test of those support zones below is a very high odds trade setup and very low risk. So that's going to be the main theme of the day. The only risk point is really how much more upside is left in this market given the quadruple witching, option expiration. The other markets are catching up, but they're also hitting some short-term resistance. They can certainly push to new highs as well. So another way to time your exit, if you're buying, let's say, a pullback, either 60, 62 or even lower, another way to time your exit is to look at the other markets, NQ and TF, and then as those markets hit their own recent highs, perhaps that would be a good time to exit any long setups in the S&P. So, again, the focus is going to be on the long side, but as far as the targets go, we have to be a bit more conservative because ES has already pretty much made the big move, and at this point there may not be enough left to really push for big targets on the upside. So if you're getting in with a 2.5 point stop and you're getting a 5 or 8 point target, it's probably a good idea to take that exit rather than continuing to hold the trade. The only time it would really make sense to hold the trade is if in real time you were seeing signs that supported the idea of another trending type move, right? So if internals were, opening up at a very high level and continuing to move higher, if tick was holding above zero, or if the skew of the tick was more to the upside, then perhaps, hold the long setups a bit longer. But if you see any warning signs in real time, and the market's already giving you some decent, reward potential on that trade, it's probably a good idea to take the exit and then buy the next pullback again, right? So continue trading on the long side, but it doesn't have to be, you know, one big trade, right? You can stack 2 or 3 good long trades on the day, and that can end up being a really, really good day. You know, it doesn't have to be this one big home run, right? You can just take 2 or 3 good long setups, safe setups at good risk reward, good trade location, and you know, just string those together instead of just holding that one trade all day long. Again, you know, given the quadruple witching, there could be a little bit of sideways movement here, and you know, given that environment, it's usually better to, you know, get in the trade, take the exit. As it pulls back, take it again, take the exit, and just repeat the process as long as the underlying environment is still supporting that you know, upside theme and that upside control. So those were really the main thoughts heading into Friday. I hope everyone had a great week. Good luck heading into today, and we will catch up in the evening.